Thank you. That was a great introduction. I didn't know about all those. It's good to know. So this is supposed to be a boring presentation. I hope you enjoy it. I have 30 minutes. It might be shorter than that, and we can have a Q&A session after that. So I'm going to be talking about what 500 Startups is, how we operate, how we assess companies, and then the things we look for in different startup profiles, different industries, etc. So some of you might know 500 Startups, there's more to the world over there. But anyways, so 500 Startups was founded in 2010. It's a VC fund based in the US. And so far, we've invested $390 million into 1,800 companies worldwide. Actually, we've invested in 60 countries all around the world, maybe more than 60. I can say that we're the most active and global fund out there. We're most well known for the accelerator that we have. We have a seed program in San Francisco, but we also do direct VC investments, meaning that we invest directly into companies that don't go through the program. What's happening to the presentation? So our main aim as 500 Startups, our mission is to democratize access to capital and access to expertise worldwide. We believe that there's a lot of entrepreneurial potential all around the world. And if we get enough access to capital and access to know-how, there will be a lot of companies emerging from places like Pakistan, Mexico, South Korea, Japan, or Turkey. So this is our fund structure. We have an American fund that's based in the US that runs the accelerator, but we also have these different regional or industry-focused funds. We have funds in Middle East, Japan, Turkey, South Korea, but we also have some funds that are industry-focused, like the mobile fund or the fintech fund. Oh, just to go back, the structure, the relation between the American fund and the other funds is American fund is a partner to every single fund. So as the regional funds, as 500 Startups Istanbul or 500 Startups Malaysia, we get to leverage the know-how and the expertise that's there out there in the US, and we get to bring US capital into these regions like Pakistan. So we're also known for investing a lot. I mean, in 2015, we've done more than 500 investments worldwide. Our fund, as 500 Startups Istanbul, we try to do 2 to 3 deals per month. So we have a refined selection process. We look at thousands of companies only to choose a couple of them. And then we have different services, which I will talk about, so that our companies can benefit from 500 Startups. We also have strategic partnerships with places like Google, Microsoft, BBVA, or Amazon, who might be potential acquirers. Our aim is to increase the liquidity, which we've talked about in the investor panel as well, to increase the liquidity of the startup scene, especially on the seed stage. There were some arrows there, but anyway, so we invest in early stage companies. By early stage, I mean early prototype to customer acquisition. So in Silicon Valley terms, this is seed to Series A. We invest at that stage because we know that there are different challenges that come up on every single different level, wherever stage you are as a startup. And when we invest into companies, we help them get discovered. Whether they're in Turkey or whether they're in Pakistan, giving 500 Startups brand name helps them get discovered much early on. We help them identify their customer profiles. We help them with different growth marketing techniques to optimize their customer acquisition channels. And of course, we give introductions to other downstream capital who are potentially interested in investing in Turkey, Mexico, Pakistan, etc. As I've mentioned, we have an accelerator that some of you might know. Our process is, it's a 4-month-long program. There are 30 to 40 companies that join our program. We invest $150,000 per company. We take 6%. We have a hands-on curriculum where we help the founders, whether it's generating their sales leads, having a marketing team, doing recruitment, or getting access to downstream capital. We also have a huge mentor network. So depending on what the industry or the product is, or what the challenge is, we can match people with our mentor network in Silicon Valley to help the founders. We have corporate partners like AWS or Google to get free services, but we also have other partnerships with big conglomerates like GM. And GM can potentially become the first customer to many of the companies that join our accelerator. And then at the end, we have the private demo day. We also have a Series A program intended for pre-Series A companies. So for some companies can get to 50K or 100K MRR easily, but then they cannot sustain that growth. To help that, we developed a Series A program. This was 4 years ago. And we run the program in places like Jakarta, Kuala Lumpur, Singapore, Berlin, London, Miami. Hopefully, we're going to do one in Istanbul as well, where we only focus on customer acquisition and marketing. That's the whole intent of the program, and then to raise a bigger Series A. Some companies that have been through our program are Intercom, Tautap, Conta Azul from Brazil, Realty Shares, Talkdesk, etc. So as I've previously mentioned, we also do non-program investments, meaning we invest into companies that don't have to come to our program in San Francisco. When we invest into these companies, there are a couple of things that we can help them with. In many of these regions, like Turkey, we're the only early-stage institutional investor, meaning there's no other VC who's able to give 50K to 200K tickets so fast. I mean, it takes us 3 to 5 days to invest into a company. It's not a dragging process. We're the only direct link to the Valley. In most of these regions, like Turkey or like Pakistan, hopefully, we are the only US-based fund, and we are the only US fund that's also based in Silicon Valley to connect to become a bridge between Pakistan and Silicon Valley. We have the programs, as I've just mentioned, and we have a global network. We have around 13 funds investing in 60 countries. That's a huge network. So if you want to grow your business to Japan or to Mexico, we have partners over there to help you, to generate sales leads, to do recruitment, to sort out the legal structure, etc. We call this the asymmetric information. So we get around 50,000 companies per year, and they're all on the same CRM. Actually, we use HubSpot. I like it, not bad. So since we get 50,000 applicants, if you're developing a product or if you're trying to solve a problem, chances are we've seen hundreds of similar companies. So we can benchmark you. We can tell you why we want to invest or why we don't want to invest using that database of knowledge. And then the sixth thing is, of course, downstream capital. If you're raising $3 million, $5 million, or $10 million in places like Turkey, there are no investors to give you that. So using 5 Startups brand name and our connections in the Valley, we try to bring other investors like Sequoia, like Accel, like Builders VC, to invest into Turkish entrepreneurs or Turkish companies. So below are some of the companies that we've done non-program investments to. Twilio IPO'd a bit more than a year ago. Credit Karma is another billion-dollar company. We have Grab from Southeast Asia, which we don't have the logo here. So how we select a company? Briefly, there are 4 T's, as we like to call them: team, technology, traction, and target market. In terms of team, we deeply value the expertise that the team has. A team has to know the problem to be able to solve it. That's why we look at the background a lot. We like the teams that are obsessed with the problem that they're trying to solve. Moving on to technology, we always have to validate that the technology works. But for some companies whose only differentiation is technology, then we also like to do a technology due diligence to understand how the product works as well. We use our mentor network to do that. Traction validates that the customers are satisfied, they are sticking with the product. That's why we look at traction. And then the last thing is target market. And by target market, I don't mean the target market size. That's easy to quantify. It's easy to understand how big a market is, how big it's growing. But we look at the competitive landscape. And that brings me to 2 concepts that I think Sam mentioned in the morning, the blue ocean and the red ocean. We have separate assessment schemes, whether a company is on a blue ocean landscape or on a red ocean landscape. So red ocean companies are there where there is a market, we can understand the market, it exists. But there are some companies that are dominating it, it's already taken. Whereas blue ocean companies, there is not that big of a market, we don't know if it will ever develop, but there's no competition. So in general, there are 2 things that we look at: the retention and engagement metrics and the unit economics. The retention and engagement metrics shows how sticky the user base is, how satisfied the customers are. Whereas the unit economics proves that for every single unit of product that you sell, product or service that you sell, you're not losing money. So if a company is in red ocean, so not this one, if a company is in red ocean, we like to invest a bit later. We have to see the retention and engagement figures. We have to make sure that the differentiation is there, the customers can see the differentiation, and they have a willingness to pay. Whereas for blue ocean companies, we can invest much early on. And those are the companies that gave us the big multiples. In blue ocean companies, we invest when there's an MVP and some pilots, and that's it. We don't have to validate the unit economics. We don't have to validate the retention and engagement. We can be an early mover, and we like doing that as an early stage fund. So I'm just going to give some examples of what would be the metrics we would look at if we had the chance to look at these companies early on. And by the way, Dave looked at Uber and passed on it, and he's really sad about it. And then we invested into Lyft. So for Uber, if we were looking at Uber early on, we would like to validate the retention and engagement first. As a transactional high-frequency marketplace, we have to look at drivers and riders separately. On the rider side, we would look at frequency of the user base. How frequent are they using it on a monthly basis, and how that changes over time. Whereas on the driver's side, we wouldn't look at the total number of drivers. That's a vanity metric. We would look at the total number of drivers who are full-time on Uber, sorry. Meaning that the number of drivers who are driving more than 40 hours a week. That means they're dedicated to Uber. Those would be the two metrics that we would look at on retention and engagement. And then for unit economics, we have to look at unit economics separately for drivers and for riders. They have different lifetime values, different customer acquisition costs, different contribution margins. Airbnb is another good example. It's again a transactional marketplace, but it's much less frequency than Uber. So at Airbnb, it's much more of a single transaction marketplace, meaning that for the guests, we have to validate that for every single guest, we're making money, we're not losing money. Because we cannot bet on the fact that this guest will come again and book again. It's going to be one transaction, and we should be able to make money on the guest side. On the host side, it's different. There's, again, some frequency and a bigger lifetime. Facebook, it's an example of a good social, mobile, non-transactional marketplace with huge network effects. If we had the chance to look at Facebook back in the day, we would look at daily active users, weekly active users, monthly active users, and their ratios, how that changes. So how many of the users that were active this month also active this day? And that ratio for Facebook was ever increasing for a while, which is amazing. We would look at monthly active users over total number of downloads. That ratio for Facebook is around 40–45%, which is amazing. If you look at Snapchat, Instagram, those are more like 35–40%. So 35–40% of the users who've ever used Snapchat are also using it this month. That's amazing. If you have a social, mobile, or a gaming company, if that number is below 20%, we probably wouldn't invest. Salesforce, typical enterprise SaaS company. When it's an enterprise SaaS company, we're much more churn-driven. So we'd like to understand churn and why it happens. After we understand churn, then we look at unit economics to look at customer acquisition cost, customer lifetime value, and evaluate it accordingly. This is one of our portfolio companies, Mori. They do organic baby clothes. So they produce products in Turkey, they ship to UK and the US. So it's an e-commerce company. For an e-commerce company, we look at the repeat rate. On a monthly basis, what's the percentage of users coming back and buying again, and how that ratio changes. That shows us retention and engagement. On unit economics side, much like Airbnb, we have to assume that one user will only come once, and we have to make that money once from him. So unit economics must be positive even at a single transaction level. But companies like Mori have 70–80% gross margins, so that shouldn't be a problem. But hardware is different. So the best hardware companies in the world are able to monetize the same user base over and over and over again. So for an example, Apple for a while was able to sell the same phone to the same customer every single year, which was amazing. But then that stopped. Once the innovation pace slowed down and the incremental difference between iPhone 5 and iPhone 6 wasn't as much, people didn't want to switch from iPhone 5 to iPhone 6. So Apple became a services company. They have Apple Pay, iTunes, podcasts, Apple Health, and other subscription services where they can earn money from the same user base after they sold the hardware. So that's a good business model. That's the business model that we want to see in hardware companies. It's not just, you guys probably know the consumer-facing hardware companies like GoPro, Fitbit, and Jawbone and how they're struggling. We don't want to get into that trap. Another good example is Peloton. How many of you know Peloton? Some of you. So Peloton sells these bikes for $2,000. They probably have like 90% margins as they sell these bikes. The tricky thing is these bikes are connected to the internet. There's a tablet, and they have a studio in Manhattan you can connect to. So as you're cycling at home, you can watch their classes, attend whatever class you want for 24 hours. It also detects your heart rate, how much you've cycled, etc. And there are certain gamification and social elements attached to it. So after you pay the $2,000 to buy the bike, then you have to pay $40 every month to be able to get that service. So after you spent that $2,000, you're going to pay that $40 for a life. You're never going to churn. So that's a good example of a hardware company that we would like to invest in, where there's a huge subscription revenue even after we sold the 90% margin bike. They're probably going to IPO somewhere in the next 12 months. So now I want to switch the topic to what we do at 500 Istanbul. How many of you know Udemy? They did some perfect, everyone knows. So Eren is one of the co-founders, Turkish guy, started the business in 2007. He was based in Ankara. He was trying to raise $100,000 in Ankara. Couldn't raise it. An angel investor told him that he wants to buy 50% of the company for 100K. Couldn't do it. Moved to San Francisco, joined a startup. Then that company exited to Match.com. It was a dating site. So in 2010, Eren decided to start again. Rebranded as Udemy, do it in the US. And once he did it in the US, 7 years forward, he raised a total of $170 million. It's on a way to become a unicorn. But it still has the tech and development teams in Ankara. So fast forward, it's been 10 years since he left the country, but he still employs people in Ankara. And as an engineer in Ankara, you'd much rather work at Udemy than work in a Turkish telco or a bank. So this is the story that we want to create with 500 Istanbul, and that's why we raised the fund. We want to have more Udemys coming out of Turkey. So that's our mission, basically, creating global success stories with locally incubated ideas and teams. And we want to scale that. We believe that there's much more entrepreneurial potential outside Silicon Valley than inside it. It's all a means of capital and know-how that needs to come into regions like Pakistan. Coming up to Pakistan. So I'm not going to talk about the 200 million population and the huge middle class that's growing and the more than 5% GDP growth. But I believe Pakistan also has the potential to have global visioned ideas as well. The level of entrepreneurship and engineering here is a huge advantage that Pakistani entrepreneurs must use, and I'll come to that later. I call this the population paradox. So if you look at these small countries like Estonia, Sweden, Israel, who've made a lot of billion-dollar exits, these are all really small population countries. So all the entrepreneurs in those small countries, they have to think global from day one. They have to think that you can't be the Skype of Sweden, Skype of Estonia. You have to be Skype of the world, and that's a huge advantage for them. Whereas for mid-cap countries like Turkey, Italy, Spain, there's nothing going on. Since the local market is big enough to become a big company, but it's not big enough to be a billion-dollar company, a lot of the local entrepreneurs target the local market, and they don't think global. And once they're going to start thinking global, there's this other player that took the market. In Turkey, we want to create a population paradox where we always say that 80 million population is not big enough. $800 billion GDP is not big enough. You have to think global from day one, from the start, and that's the culture that we want to breed. Hopefully, it's going to happen within the next 10 years. And I call these people the Renaissance entrepreneurs, meaning the entrepreneurs who've created the local ecosystem from scratch. If you look at what Niklas did for Sweden or what Vinod Kozla did for India, these entrepreneurs became immigrant entrepreneurs. They went to the US. They created huge companies like Udemy. But then they gave back, meaning that they had their first tech teams back home. And once they were able to exit the company, once they earned money, they gave back even more. They invested into the local ecosystem, and that's how we can create a world-known global ecosystem from Turkey or from Pakistan. It's not only the local success stories. PayPal is a good example. So I believe successful companies bring more successful companies, and PayPal is the best example. This is the PayPal mafia. We also have an Estonian mafia, Swedish mafia, and Israeli mafia. I'm not going to go into those, but as you can see, out of PayPal, from the co-founding team and from the initial employees, there were companies like Tesla, SpaceX, SolarCity, 500 startups, Zenefits, LinkedIn, YouTube. They all came out of PayPal. A similar thing happened in Estonia. We have Skype, Kaza, Playtech, TransferWise, Pipedrive. These are all 100, if not billion-dollar companies that came out of a country with a population of 1.3 million. We want to have a similar landscape for Turkey. So looking back 10 years from now, hopefully we're going to have a lot of Turkish entrepreneurs who've came out of companies like Udemy or coding that we've invested. So this is bullshit. I'll just stick here. So we also believe that there are a lot of risks of being in Turkey, of being in Pakistan. So our goal is to hedge those risks and use the advantages. But what I mean by hedging the risks, we don't have any know-how. That's why we try to bring the know-how to Turkey. We don't have any capital. That's why we try to bring the capital to Turkey. And our advantages is the cheap talent that we can always use. And the cheap talent in most of our companies brings us to early sustainability. A lot of our portfolio companies are sustainable early on, so they get the chance to pivot as much as they want until they find a huge product market fit and a way to scale. Udemy, for an example, started as an online live streaming tutor. It wasn't this e-learning platform that you see right now, but they pivoted and pivoted until they found the product market fit. I can't say the same thing about PayPal. PayPal changed model at least 6-7 times until they found the model that went to their exit. So Moral of the story is, Pakistan is huge, but the world is bigger. So there are going to be some entrepreneurs going for the local market, but hopefully there are going to be some entrepreneurs who have the vision to also create global success stories. And that's also the story that we want to create in Turkey. As I've said, the presentation is short. It's only been 20 minutes. I have 10 minutes of Q&A. I can.
Thank you so much. I'm Adnan, and basically I'm working with my institute, Sayyid University, initializing incubation center here. So my question is, if you talk about the security of yourself, you are coming out of something, you are doing something against the market, old market segment. So how to gain self-confidence, how to make a stand and face that difficulties in the phases of your life? How will you?
I didn't understand the question.
How can I defend myself from the oppositions?
Oh, from competition.
There are
Okay.
there are extremists who would maybe they can take my life away. So what should I do in this phase? Give me the answer, please.
By going out of your comfort zone.
Yeah, this can be. Thank you.
In terms of competition, it's always clever to push yourself into a blue ocean market, differentiate your product, differentiate your user base, but that's not your question. I believe your question was sometimes there are security issues that you face. Those are things that we see in Turkey as well. Those are not the things that we see in Silicon Valley. That's part of the reason why we want to have global success stories so that no one can defeat them. We don't have those issues if you're building a global business.
So has there been a startup that you guys sort of passed on and then sort of regretted it? And why did you pass on it? As in...
Me personally?
Yeah.
Yeah. So we were going to invest into this LiDAR company, autonomous driving. They claimed that they had a patent on a technology. We didn't buy it. We tried to understand the technology behind it. Couldn't understand it, because to be able to understand it, I should give maybe 8 to 10 years of my life. So I couldn't understand it, so we passed on it. Like 3 months later, they raised $10 million. It's huge. There was this other company, Game Credits, actually, I can tell you the name of the company. They ICO'd. They raised $55 million from an ICO. They were raising $1 million at $7 million valuation. Couldn't raise. We passed on the deal as well. 3 months later, last May, I was looking on the altcoins and which altcoin to invest in. I saw the name of the company. I was like, shit. I looked at the market cap. Market cap was $350 million. But still, I believe it was a good decision to pass on the company. Like, I would pass it again if it comes, because it's a huge bubble. But anyway, so those are some of mine personally. If you look at 500 startups in general, we passed on Uber. It's a huge mistake. So I believe if you believe that a company can become a multi-billion-dollar company, you shouldn't pass on just because of the valuation. And that was the reason why we passed on Uber. Looking back to our HubSpot CRM and the reasons why we passed, the main killer was the $60 million valuation, which would have given us around 1,000x in terms of value creation and maybe 300x in terms of actual monetary value today.
Hi. Here. Hi, my name is Ahmad Khan. I have a couple of questions for you. I want to know if 500 startup, as you as a representative are here to invest in startups here in Pakistan, or are you here to take them to 500 startups Istanbul for incubation or things like that?
Great question.
And if you are here to start in companies over here, how are you going to manage them remotely? Being over there, and not being physically over here. So how are you going to manage that?
Great question. I'm also confused. Um, but I'll be honest with you. So I'm here for multiple reasons. A, if there's a company that wants to join our accelerator that's building a global product, which there is, then of course I would like to push them into the direction of the accelerator. We can invest from the Istanbul fund. And it's a US-based business with tech team in Pakistan. I would love to do that. We've done that with a lot of countries around the region. We haven't done any to Pakistan yet from the Istanbul fund. Hopefully we will. Speaking about the local market opportunities and the local market companies, I don't think we can invest into the local market from the Istanbul fund, given that it's not our mandate. It's the mandate of the Singapore fund to invest within the region, and we're exploring. They did a couple investments into Bangladesh. They did a lot of investments into India. So Pakistan is also a potential region for us to have 500 startups within the next year or two. So we are looking into the possibility of having a fund here, but nothing in the short term. I had to be honest with you.
Hi, Rabil from Sarmayakar. Given 500 startups has entered many different markets, which probably had very different dynamics, and in some cases probably had a dynamic similar to Pakistan, where the local investors were not really participating in early stage investing the way is required to kind of really push the ecosystem forward. What in your experience, what has been your experience or 500 startups experience of kickstarting some of those investments in different markets? Is it just a matter of seeing some international investors come in, take that plunge, which then they kind of like, back up? Or is it first an exercise of kind of like doing the rounds and finding the local partners, and only when all the ducks are aligned that you actually start investing and hope that follow-on capital is available in those markets?
In many of the countries that we have 500 startups funds in, there was no other local investor present as an institutional VC. There are some angels, there are some corporates that are putting some tickets in, but nothing institutional. No one that's mandated to invest. So I believe investments and taking money into a company or into a country is more of an outcome than an input, except for the seed ticket. The seed ticket should be there. And as 500 startups, we believe that once we put that 100, 200, 300K tickets in to jumpstart the business and they can show enough traction, then it's our job to invite other parties to invest into the region, or it's the entrepreneur's job to amaze and inspire other VCs to invest into the region. So I believe that if we do a good job, along with our portfolio companies, enough investors will come. To give you an example from Turkey, after everything, the geopolitical situation in Turkey for the past 2-3 years, all of the international investors left, almost all. So we were left only with a couple of local funds who only want to invest into the local market. But some companies that were growing 2x, 3x year over year, and now they have to raise 5 to 10 million, they can't raise and they go bankrupt. So our main thesis as 500 Istanbul was that since we're investing into global entrepreneurs and global vision companies, after our ticket, we will be able to find other VCs to invest into the same companies as well. And that has been the case. So out of our 31, actually 29, 2 is closing now, 29 portfolio companies, 18 of them raised follow-on funding, and 13 of them raised from non-Turkish VCs or investors. So we brought VCs like 2 Sigma, Builders, Bullpen, who has Tandem Ventures, Sequoia, invest into our portfolio, where like most of the team was based in Turkey. They had a co-founder in San Francisco, they had a co-founder in London maybe doing sales and marketing, but the majority of the employment was in Turkey. So I believe we can accomplish that in any region as long as we have a fund and we can invest as frequently as we want.
So I have a slightly different question. There's a lot of interest in Pakistan within the government, as well as the donors such as the UK aid and US aid working in Pakistan, developing the ecosystem, the entrepreneurship ecosystem. So in your view, what role does this type of money have in this space so that it doesn't distort the market and the incentives for the private players, but yet it contributes to building the ecosystem? What would the best use of those funds be?
There are really good examples of how government contributed to the ecosystem all around the world. If you look at places like Finland, where the government tripled the money that private investors put in as a debt, but you don't have to pay it back if your company goes bankrupt. But 5 years from now, if you grow the company, you have to pay it back to the government. That's why many of those entrepreneurs around the region incorporate in Finland, try to raise money just to be able to get that 3x more money. That was amazing. I met with a company that raised 150K. They were able to get 3x that money from the government. Then raised 500K. They got 3x again from the government, and that's how they came to a Series A, becoming a Series A company. Those were Ukrainian entrepreneurs, but unfortunately they can't incorporate in Ukraine because there's no such structure. Another good example is Israel and what they did with the Yozma Fund 30 years ago. They raised a fund to invest into the companies locally in Israel, and 5 years later they told international VCs, hey, come to Israel, buy our stake in these companies for the paper value, so you're going to immediately have 2x, 3x returns, but there's only one rule. You have to provide that much more capital into the other companies in Israel as well. That's why all of the UK, US funds came to Israel. So a lot of governments like Oman, Qatar, Singapore are doing similar things. Even Azerbaijan tries to do, Kazakhstan tries to do. So I think to do those is really important. We try to push the Turkish government to do something like that, but given what's happening with ISIS, coup attempt, PKK, blah, blah, blah. I don't know the acronyms anymore. We couldn't push it forward because they have higher priority agendas. But I think it's really important. Time is up. All right, perfect.
Okay, so I have one last question. I'm Senan from Investors Lounge. So what matters to investors, what I've seen in pitching to investors is that they look for a sustainable competitive advantage. So in your experience of having and investing in these 500 startups and over the profile of your years, are there time-tested competitive advantage that startups can look to build in their calculus? Mm-hmm. Except for patents, because that's a very generic sort of answer.
So let me talk about the competitive advantage as a fund rather than as a startup, since you're raising a fund, right? Yeah. So in a normal market, Silicon Valley is a seller's market, meaning that the startups dictate the valuations. That's why even from scratch, when there's nothing, there's only a deck, the valuation is $6, $8, $10 million. That's the case in most of the US or places like New York, LA, SF. Whereas in emerging nations like Pakistan or Turkey, it's a buyer's market. So we dictate the valuation. Although this can be bad from an entrepreneurial perspective, this is amazing for the VCs. I don't want to say this, but I think we're entering into companies at maybe 50%, maybe 60% lower than what it actually has to be. And once we move those companies or we put those companies into the lights of other US-based VCs, we get like 3x, 4x, 5x returns in the first 6 months. That's a competitive advantage for us, sustainable at least for now until we have more funds in Turkey. Another one is the cheap tech talent. So almost all of our companies utilize the cheap tech talent while growing the business, so they become early sustainable. They reach early sustainability. And once they're sustainable early on, now we've hedged the risk of not being able to fundraise. We know that they will survive. Now the goal is to find an actual good product market fit and to achieve hyperscale growth, which is a whole another issue. But that's another competitive advantage that none of the US-based funds have. I don't know how we will do. You should ask me in 7 years or 10 years. But so far, it's been doing really well. We kind of proved that if we find the right entrepreneur and we get the right VC, it gives us huge multiples. Some companies that we've invested at 600, 700K valuation raised at valuations of 8, 10, 12 million within the next 6 months. And you can have that advantage in Pakistan as well, in many places of the world. Thank you.